Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we've welcomed back Romain Nouzareth, the CEO, co-founder, and chairman of SATO Technologies, to provide an update on his organization. This is one of the smaller Bitcoin mining companies that we cover, yet extremely efficient and consistently in the top 5 within Anthony Power's rankings. Now, I'm super excited to get into today's interview, but before we do, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to myself, Anthony, and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you thought of today's interview, if you're currently holding shares of SATO Technologies, and your outlook in terms of Bitcoin price moving into this April's halving event. Now, with that being said, let's get into today's video. Okay guys, so that's right. We've got Romain Nouzareth. He's the co-founder, chairman, and CEO of SATO Technologies. Now, this is one of the smaller miners that we cover on the channel, but they're consistently ranked in the top 5. Very efficient, very well-run business here. We've had Romain on the channel previously. We wanted to welcome him back to really kick off 2024, talk about some of their plans, obviously talk about the halving that's coming up in about 9 weeks' time, and a number of other key developments at the organization. So Romain, thanks so much for being here. It's always a pleasure.
A pleasure to be with you, and thank you for having me, Bryce. Really happy to see our power mining analysis going up and going live. Really interesting data about the industry, which is really needed. So it's a great, and I'm very happy on behalf of our team, of course, to participate into that data set.
Well, thanks so much. Yeah, Anthony and I have been working a lot behind the scenes to bring power mining analysis to life, and it's great to have all the support. So thank you to you and your team. Now, we've also got a special giveaway in today's video, but we're going to save that towards the end. Romain can explain a little bit more about that when we get there. But first things first, Romain, for people who maybe missed our initial discussion or aren't super familiar with SATO, can you give us a little bit of information about the company, your current operations?
Sure. So we are SATO Technologies. We started in 2017. It's a company I co-founded back then. We started by 2 megawatts of energy, and we grew the last cycle at 20 megawatts of energy. So today we are running close to 0.6 exahash of mining power. To give you an idea, in 2023 on average, we're talking about 0.10% of the total Bitcoin network. So we are not the bigger miner, but we are there on the map, and we are also very efficient. I'm sure we will talk about that in a minute. In 2021, we decided to become a publicly listed miners because in our business, in our industry, in order to grow, you need to deploy capital and you need to deploy CapEx. We have 2 types of CapEx: CapEx for the infrastructure, the energy that we transform, and the computers that we run. At the very beginning, at the very core of ourselves, we are infrastructure people and we are operators. So we have no intermediary between our energy and the Bitcoin we produce. We are mining from Quebec, one of the best places in the world for having very stable energy, very well priced, with around 4.3 cents a kilowatt hour. It's one of the best prices you can find in the world. But more importantly, it's a very stable energy at scale. And it's also an energy that is 100% green. 96% from the Hydro-Quebec grid is coming from hydropower. We are also very efficient in the way we mine our Bitcoin, again, because we transform our energy ourselves. We have no intermediary. We also developed our own software to manage our own fleet of miners. We have around 6,000 miners today running in our center. And we want to continue growing. This is why we wanted to get listed, being able to deploy capital and grow to the next cycle.
Exciting times for sure. And in this industry, Romain, we all know if you're not growing, you're dying as it goes. So we'll talk about that in a second. I want to get into your January production results, but you say Quebec is known for having some of the best affordable power rates. They also have some of the best food in the world that I've ever tried. So if you guys are ever around, definitely try that out for sure. But I know you guys just put out your January production results. Obviously an exciting time as we kick off this new year. We've got the halving just a couple weeks away now, 9 weeks away. So can you give us some of the highlights from January, Romain, as well?
Sure, with pleasure. So we are publishing our production every month. It's available from our website, www.buysato.com. You can subscribe to our mailing list and you will receive them as soon as we publish them, mostly at the beginning of the month. The idea is to also follow other publicly Bitcoin miners and being able to publish our numbers and be very, very transparent. What is important and interesting to see in the January report is our efficiency. When you look at the number of Bitcoin we make per exahash, we are very super efficient, not only month to month, but only on a yearly basis. And that's really important because in Bitcoin, if you want to be performant, it's a long-term game. It's not just about like making one Bitcoin today and having nothing working for the next 2 months. So this is really our focus, and this is what we show in this production. We're also showing like a number of Bitcoin we mined last month, or 31 Bitcoin, or exahash. One thing that is very important to look at is the average price to produce one Bitcoin in electricity, which is also something we published every month. Last month, it was around like $15,000 in electricity cost to produce one Bitcoin in our mining farm. It's a very interesting indicator because with the halving coming, we often hear that the electricity is going to be multiplied by 2. It's not really the case. The electricity price remains the same, but because the reward is divided by 2, our production cost will increase by 2. This 15,000 would become a 30,000 post halving in our facility with the number from last month. And it's really key because the halving is about exactly this. It's about making sure that the most performant miner stays in business. This is where minor capitulation arrive, and minor capitulation that people who are not efficient in their electricity, in their management of data centers, or maybe old mining fleet. That's not what we have. This is not how we've been set up. We've seen halving before. We started again in 2017. We've seen the crypto winter. We've seen COVID. We've seen lots of things. Last year, we were mining Bitcoin at $16,000. And yet, when you look at the results that we published in Q1, Q2, Q3 of last year, it's amazing financial results. Not only we are increasing our revenues, but we are making more margin. In Q1, Q2, Q3, we are operating cash flow positive. It means that our data center was making money during this 2 quarters. 2 quarters also, Q1 and Q2, we were creating net profit, so making money overall. And we will publish Q4 sometime soon, at the same time than the year. As you know, we are audited every year by one of the most and the best auditor for crypto mining in the world called Grant Thornton, also from Quebec. They are the practice. They are doing lots of Bitcoin miners. And probably a good 30 to 35% of all of the Bitcoin miners who are listed on the NASDAQ. So we will publish those results at some point, but it shows that we are very efficient, not only in the Bitcoin we produce, but also in how we manage our company and how we manage our costs in preparation for the halving. But the halving, again, we are confident. We've seen it before. We know how to navigate in this kind of water. And the most important thing is to be able to manage your own electricity and to transform it yourself to create your own Bitcoin. Because if you have too many intermediaries between that and people, you pay a very high price. And the difference between paying 7 cents or 8 cents a kilowatt hour and 4 cents in our industry, it's a world. 80% of our costs are electrical costs. So if you double or it's twice less important, it's really changing. So that's why we are confident with where we are today and where we are going next. Now, to your point, which is I think very interesting, it is often said that in the industry that if you don't grow, you will become irrelevant in some ways. I would tend to agree and not to agree. I would not agree because again, the most important thing in the business is to be efficient. It's not to be as big as possible. Once you're efficient, like we have done and like we have proven to do, let's go as big as possible. And this is where we are today. This is, in my mind, we are, and I'm sure I'm not the only one having this vision, but we are at the beginning of a next cycle of 4 years. In Bitcoin mining, Bitcoin in general, we see cycles that are around 4 years time. Why? Because of the halving. And in these 4 years, we will see probably 2 years of going up, 24 and 25 probably going to see another all-time high. And the next 2 years, we will see the Bitcoin probably retracting like we've seen before. But it means for us, Bitcoin miner, we need to build and we need to grow with this mindset in front of us and saying and being able to say, okay, how do I go from the 20 megawatts I am now to something bigger in 4 years? And I see three main phases in this 4-year cycle. The end, around like 36, 48 months. I think with all of the money in the world, which we don't have yet, so it's hypothetical what I'm saying, but with all the money in the world, what I would do is that I would go and negotiate high voltage energy with a big data center that will take around like 36 months to build. And you you sign a PPA, can be 100 megawatt, 200 megawatt, 600 megawatt, like Iris, for example, has done. They have they developed a site like this and they are building up. But it takes time, and it takes time because you need to sign the PPA yourself in order to have a low cost of energy. If you want to pay 2 cents a kilowatt hour, you need to transform the energy yourself from the high voltage. And that means that you need to make some kind of investment, mainly electricity, to transform this energy from 300,000 volt to 280 volt you need for running a miner. And it costs more money. And the equipment you need, like a substation, transformer, etc., they take time to arrive, sometimes 12 months, sometimes a little bit more. But you're building infrastructure for the long term, 20 years, 10 years, 15 years, for data center and for transforming electricity into computing power. In the middle of this cycle, what I would do is I would have an approach similar to what CleanSpark is doing right now, which is to sign deals in municipalities, 20 megawatts, 50 megawatts, 30 megawatts, maybe do some acquisition. This is very similar to what we have done in Quebec. In Quebec, we are in a municipality, we are 20 megawatts. We are bringing lots of benefit to this municipality. We are bringing more revenues and more margin for something that was wasted before. The energy was sitting there and not used. When they need it during winter, we curtail, meaning that we give back the energy to the grid and people can continue heating their home. So it's really a good benefit for the municipality. In some municipality in Quebec, next to ours, they are bigger for Bitcoin mining. They have around like 110 megawatts, I think, for Bitcoin mining. They made so much money, the municipality, selling this energy to Bitcoin miners, that they didn't increase the real estate tax by $1,000. I think this is major. And I think this is why with a local vision, you can really convince municipalities to give you more energy to develop data centers, which at the end are data centers. We are just transforming energy and using bits the same way that Amazon is doing in some ways. And I think it's really a good way to grow very quickly. And at the beginning of the phase, which we are now and we are starting, it's really the race to grow your hash rate and show the market how you can grow and add more hash rate. But we're working on this. We have something amazing in our hand, which is a publicly listed company. Yes, we are junior. We are a small one, small fish in the market when you compare with the big brands listed on the Nasdaq. But at the same time, we are following their steps. They've done it before us. People who are successful today on the stock market, they are people who've been able to raise a lot of money in the last cycle. We were not. We were listed at the end of the bull. We entered into a bear market. The equity market was completely closed. We've been able to do an amazing product on the debt offering with one of our banks called Signum. And we bought some miners. We bought the mining computers we had in our centers. It's an amazing product. It's over 3 years. It's like buying an apartment, kind of. And every month, we pay the principal and the interest, and we are buying our miners, which is also something that is important. People are focusing too much on the electricity price. Yes, it's important, but it's not enough in our business. You need to go different step beyond in order to be even more efficient. It's about how you manage your center, how you manage your electricity, how much did you pay for your computers, well, they're already here. You have lots of components that make success. And we believe we have the keys to really go to the next level in the next cycle. So we're really, really excited because it's a time to do it.
Yeah, I really like your breakdown there of the 3 different parts of the market cycle and the different strategy or approach you'd have. I want to get back to that growth comment you made there, Romain, but I did want to toot your horn a little bit here. You guys not only were in the top 5 of Anthony's power rankings for the Bitcoin per exahash also utilization and revenue by hash rate. So on our website, Power Mining Analysis, Anthony puts together a monthly review. SATO Technologies, again, like you say, Romain, despite the size, you guys are definitely holding your weight with some of the biggest, most efficient miners out there right now. So congratulations, and we look forward to seeing that continue in the year as well. Now, speaking about the upcoming year, you said in this part of the market cycle, you'd be focused on exahash growth, especially now that you've already got the efficiency component dialed in. So what can we expect in 2024 for exahash growth, targets, expansion? What are you able to share?
Well, in terms of goal for 2024, I can only share objectives once we have the financing behind it. So what I can only tell you is this: we are at this beginning of this phase. It's adding hash rate. The way we want to do it is to do it smart for our shareholders. We don't want to create dilution for creating dilution, but at the same time, we are in a business where if we want to grow, we need to deploy capital. I'm not a startup inventing a new product, and if I have 10 million users, then all of a sudden I make 10 million more money than if I had one. In our business, if you want to grow, you need to deploy capital to buy miners, to buy electricity, to buy instruments, and all of these kind of things. But we want to do it smart, and we've done it smart. And myself, I'm the co-founder of the company. I'm the biggest shareholder. I'm not here to just make like a small announcement and this kind of thing. We're really focusing on building in this 4-year cycle. What I can tell you is that with all of the money in the world, this is where we would go. This is what we would do, and I believe it's achievable for a team like ours.
Amazing. Now, speaking of opportunities for the upcoming year, AI and HPC, these are another part of the Bitcoin mining world that have been making a lot of waves right now. A lot of people and companies are really starting to explore opportunities here. Can you speak to us a little bit from your perspective, Romain? Where are the opportunities? What is SATO's official stance on other revenue generating verticals like this?
Yeah, it's a very good question, and it's a question that we've been answering from a long time, or at least like thinking about from a long time. AI and HPC is totally in the range of what we Bitcoin miners can do. Like, I'm not saying we are better than a hyperscaler like Google or Amazon or Microsoft, but the way we transform energy into computing power, I think it's very much adaptable to AI and HPC. At the end, it's managing different kind of computers. Yes, you have some differences. You have two main differences between AI, HPC, and Bitcoin. The first one is the business model in itself. You need to have a sales force. You need to find clients. The beauty with Bitcoin, I plug a computer in the wall, it makes Bitcoin. I don't have to have people to call. I don't have to have a MicroStrategy to follow my clients, etc. So that's one thing that you need to consider. But at the same time, what we see happening is offers are being built around cloud computing in which we could bring our computing power to this cloud, and this cloud will serve as the interface finding clients. A little bit like a pool is playing for Bitcoin mining. So that would be interesting, because in that case, we could focus on the second part of the differences between AI and HPC, which is on the data center in itself. Yes, it's the same thing as the electricity and transforming the electricity, but the data center in itself are very much more different. With AI and HPC, you need to have 99.9%, your center being on 29.9%. And in order to achieve this, you need to have redundancy in electricity. It costs a lot because you need to have batteries in order to kick in if you have a problem, and that for the time until a generator will start. A generator usually with oil and this kind of stuff, but it costs more money. It costs more money also to cool. Mostly you need to have an AC into your data center, and the AC has two negative effects. One, it costs money in electricity, and two, it uses your electricity. If you're capped at 200 megawatts, for example, somewhere in Bitcoin mining, you don't have to put 20 megawatts for cooling. In AI HPC, you have. And then you have something about like security, internet line, etc. I'm not going to go too much into the detail. To give you a comparison point in terms of data center, without the computers in Bitcoin mining, we could make a megawatt for around $200,000. For AI and HPC, it's way much higher. It's around like $3 to $5 million. And it could be more because you have also new technologies coming with cooling, water cooling, and this kind of thing. At the same time, we believe we have a role to play in this industry because it's in our range, and also we believe that it's by matching the energy as a whole that we will be able to find new places to expand. Let me explain. If you one of the beauty of Bitcoin mining is the fact that we can curtail, so we can stop our computers very quickly. So we can go to grids where AI and HPC can go really. But maybe we could find places also where we would develop one center, let's say 200 megawatt, 500 megawatt, and you would apply 1/3 for Bitcoin mining, and that would serve as your cursor to manage the grid and making sure that the AI and HPC never stops. And this way, maybe we can find ways to get more energy. It's where the market is going. We have started looking at it. We're in discussion with different people and different players. We have not announced anything precise yet. It's big investment. We want to do it right. We want to do it at the right time, but we're really looking at it. Lots of Bitcoin miners are doing it, and I understand why. It has also an interest. It's true to be focusing on Bitcoin, and some miners are also doing this and not touching AI and HPC. For us, our raison d'être and the way we exist is really to manage electricity, transform electricity into a Bitcoin, into a computing power. We love Bitcoin. We're Bitcoin fans. We're Bitcoin maxis. We will continue doing Bitcoin, but we think that also doing any kind of other computing power will make sense for us in the future.
Sure. Yeah, it makes sense. And there's a lot of synergies there. And obviously why we're seeing so many of your competitors starting to make steps into that realm or sector. Now, Romain, question for you. This was actually from one of the subscribers. With all of the new vehicles now, like the ETFs, you've got the Bitcoin itself, miners. There's a lot of different ways to get exposure here. There's now all the derivative markets opening up on the ETFs as well. Why would someone want to invest in a small pure play Bitcoin miner as opposed to some of these other options out there?
It's a very fair question, and yeah, I think you have more than one question in this. But I mean, first of all, yes. Why? I mean, first question, right? Which I think is behind this is with the ETF, is the money going to be diverted into the ETF instead of Bitcoin miners? It's a possibility. It's possible that some funds, some VCs, some institutional will decide that it's better to buy Bitcoin via the ETF rather than buying Bitcoin miners. However, the reason why Bitcoin miners have been working well on the stock market is because it's better to buy both. It's better to buy Bitcoin and to buy Bitcoin miners. So I think it will be the same thing with ETF and Bitcoin miner. I don't see where we'll see a diversion or diversification of the money going from Bitcoin miner to ETF. Even if it was happening, the fact that we have money flowing into the ETF makes it so good for us that because the price of the Bitcoin is increasing, and it means that our margin is increasing. If the Bitcoin takes 20%, next month I'm going to make 20% more money and 20% more margin. That's what it means, really. I mean, kind of with some kind of small differences, but big picture, this is what's happening. So the benefit of having more people investing into the ETF will bring a higher Bitcoin cost, which is good for Bitcoin miners, so our stock will go up. Now, the second part of the question, if I understand it well, is why SATO and not a bigger Bitcoin miner and or the ETF? Also fair question, and I think the answer is not or, but it's and. And I think if you are an investor who's been doing a long time, you know that you need to play and then put your eggs in different kind of baskets. You will, I think, in this next cycle, Bitcoin miners, ETF will continue growing, but it's based on the increase of Bitcoin, of the Bitcoin price. Bitcoin miners, I think the stock for all of the Bitcoin miners publicly listed, I'm not talking about SATO, I think we will all go to next all-time high like we've never seen before. My vision, again, I might not be true, but my vision is that we will have the same craziness around the multiple of the exahash. As a reminder, in 2018, 2020, publicly listed miners, you were looking at the ratio exahash for valuation. It was like going to a new height every day. So I think we will see this trend coming back for Bitcoin miners. And like in any company, some will take 200%, some will take 2,000%. what I can tell you is that we're working to be in the latest category, doing a high percentage. We're starting small, so I think we have lots of possibilities. And also, again, we're following the steps of other Bitcoin miners who were here before us, and now they are the big guys because they were able to deploy capital in the last cycle. This cycle, it's our turn. We will start where we start. I'm not saying we're going to be bigger than Marathon, but we know and we have ways to go. And I think this is why it's interesting to look at Bitcoin miners, publicly Bitcoin miners in general, and do a mix between small cap like us and bigger caps, and also, of course, do your own research and look at financials of the companies, look at different kind of things. So I think it's not only about us; it's more about an industry. I really believe we are going to see new paradise very soon.
Yeah, I love it. We need young, hungry companies like you to keep the big guys on their toes. And like you said, it's your turn up this round or this cycle. Now, one of the other things you talked about a little bit earlier was actually the upcoming halving and some of the impacts to revenue and profit margin and stuff. And we've talked a lot about the electricity costs and the actual block reward, but transaction fees are also becoming more and more relevant to mining companies like yourself. And we've seen that spike throughout 2023, most recently in December. SATO Technologies has a unique angle there as well with all of your Ordinal activity, and we can talk about the giveaway in a second here too. But how do you see transaction fees evolving post-halving? How do you see the Ordinals market evolving? And what role will SATO play in these areas of the Bitcoin world as well?
Well, you're right to point that the transaction fee increased, and they really hugely increased between 2022 and 2023. In 2022, the fees in total, we were talking about 5,000 Bitcoin. In 2023, more than 8,000 Bitcoin, 500 to 8,000 Bitcoin. It's a huge increase for the fees. And we've seen that all of the Bitcoin miners, when you look at our production, monthly production, you can see that lately our production is increasing with the same exahash or the same mining power, and at the same time with the difficulty increasing. So the benefit for us as miner with the increase of fees is that it's counterbalancing the increase of the difficulty. It's also showing something interesting. It shows how Bitcoin miners will survive first halving, then the next halving, and the next halving, which is the one we are thinking of. We're not thinking about the one coming in 2 months. It's done. It's finished. With thinking about the one in 4 years and in another 4 years. So it shows that we Bitcoin miners are going to have more from the fees. We had fees that were more important than the block reward during the past few months. I think around 7 or 8 BTC fees for 6.25 reward. It's really interesting to show that we will make more money this way in the future. At the same time, I believe. I believe one of the reasons we have seen more fees. It's because of Ordinals and the increase of Ordinals and BRC20, which are some kinds of token, infungible token on Bitcoin. That's the reason why it has increased. I think we will continue and increase because I think this is growing. We have new collections. You have lots of people developing different kind of solutions. But I think more importantly, what we will see is the development of L2. L2s are a way to have transactions based on Bitcoin, using Bitcoin or Satoshis or Sats. For example, for the Lightning Network, for different kind of solutions that are coming. Where people will use Bitcoin but transact into a specific network, L2, which is faster to access and costs less money in fees, which is also great because it will mean that L1 will really become the international ledger to settle transaction in 10 minutes. 10 minutes. This is amazing. This is the beauty of Bitcoin. In 10 minutes, you can do a transaction in the world. It's settled. There is no chargeback and this kind of thing. That's L1. L2, this is where I think we will have the massive hyper Bitcoinization, where we will have more people coming into Bitcoin and then using Bitcoin on a day-to-day basis. I was seeing a chart a few minutes ago from on Twitter, and they say before you were buying Bitcoin, soon you will earn Bitcoin, and this is the world we will go into. People will be paid in Bitcoin. And that's how people will make Bitcoin in the future. And these L2s are coming. And I think we are at this time, a point in time, where it's the beginning of it. The Ordinals has brought a new breed of creativity around developers and developing new solutions on Bitcoin. And we, as a Bitcoin miner, we think we have also something to do, and we like to experiment solutions. It's a little bit like MicroStrategy from Michael Saylor announced that they are now doing a Bitcoin company and they will develop their software on Bitcoin. We don't exactly know how, but it's a trend. It's a way to get more Bitcoin on your balance sheet. The first way that we have is to mine Bitcoin. We are super efficient. We want to grow as big as we can. Another way to make more Bitcoin is to have services, applications, find solutions to bring solutions to end users so that they can use Bitcoin more and more on a day-to-day basis and try to get some more fees from the usage of these people. That's how we see the evolution of this part of the software part in our business. But again, the focus of the company, that's really to grow our mining capacity. Nothing is simple in life. You always have difficulties at some point. But in terms of business model, I created companies for the past 20 years, 25 years. I've never had one company in my hands that was that the way to go is simple. I mean, it's written. It's building energy and packaging it with computer. I've been doing it for the past 7 years. So the path is simple. The software part, it's a little bit more complicated because you never know exactly what people want, how it will work, etc. And it's a longer time frame to develop. But we've made, and to come back to your point, we made an application for the simplification of holding Ordinals on Bitcoin. It's called Hordes Wallet. And we also made a collection of Ordinals. And that's the giveaway that we wanted to do. We wanted to give away one Ordinal of this collection. And I think, Bryce, you said you will put the how-to on the comments?
You bet. Yeah, we'll get a link to the Hordes wallet on there. We appreciate you offering one of these Ordinals up, Romain, and we'll probably be giving that away to the comment with the most likes below, you guys. So leave a comment below. We'll give you all the details. You can shoot me an email. We'll get you sorted out with the wallet and the Ordinal, courtesy of Romain and team. As you're talking about these Ordinals, Romain, what gets me so excited about them is just the markup potential over the face value of the Satoshi, right? It's almost like collecting coins or really rare, unique bills that are not in circulation or whatever the case is. But when you look at the face value compared to what these NFTs and Ordinals are going for, it's just astonishing. And then you start talking about margins on that in return, it gets pretty exciting.
I agree. It's true that when you look at the value on one SAT, uncommon SAT, which is the first SAT of every block, every 10 minutes, it's rare, but it's not completely rare. The first SAT, because now they have a number. You have the first one, the second one, the third one, and the 21 million one, I think. Whatever. You have 6.25. So anyway, the first one, called uncommon. Today on the second market, I mean on Magic Eden or places like Ordinals Wallet, etc., you can buy some of these uncommon sets, and they are sold for around $250. But a few months ago they were like $400, and a few days ago also. The price varies, but it's really crazy when you think about it, because that's one sat, and one sat in dollars, we're talking about $0.00002. In comparison for something that you can sell for $250, that's a huge increase. So it's really interesting. It's also bringing new ways for collectors to develop things, to use Bitcoin in a creative way. You have a negative side to it. It's not only good to have a network where the transaction fees are too high, because it could also slower the adoption of the chain. We've seen that, for example, on Ethereum 2 years ago, before they made the merge with Bitcoin. We also want to make sure that most people could have access to Bitcoin and do transaction everywhere in the world without being congested, because it also means that the block size becomes more expensive. This is what it means, Ordinal. But at the same time, we find more ways to be more efficient, so we are winning at the end. And also, I think it will bring people to using more L2s. And L2s, I think this is where Bitcoin will go to another phase of expansion, where it's going to be a massive hyper Bitcoinization, like we said before. So all in all, I think it's a positive that we have Ordinals and this new breed of development on top of Bitcoin.
Yeah, I agree. It's all amazing. The fact that this was put together, this idea came up with by someone who's unknown to the world still is just astonishing. And you're right, as Bitcoin becomes more and more normalized, we're just finding more and more use cases and problems that it's solving. And then you start talking about layer 2 and all the rest of it, hyper Bitcoinization. We'll have to save that for another day, Romain, but we appreciate the discussion. Congrats on the January results. This is one that we look forward to following throughout 2024, including you guys in the tables. And like I say, really giving a run to those larger miners, knowing that Romain and team are coming for them. Romain, thanks so much for your time. Thanks for the Ordinal, and we look forward to seeing you soon.
Thank you, guys. Speak to you soon. Take care.
Cheers.